Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what these companies are really up to. And when it comes to Scienture Holdings Inc., it looks like they're doing some interesting fundraising. So let's dive in. Before we start, if you appreciate getting straightforward insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we break down more of these filings and chat about what it all means. So what's the big news with Scienture Holdings? It looks like they've been busy selling more of their stock to raise cash, a pretty common move for companies needing money for their operations or growth plans. Let's start with the basics. This document is a Form 8K, which is basically a report that companies have to file when something important happens. One of those important things is when they enter into a big agreement that could affect their business. The important date here is August 13, 2025. That's when the earliest event we're talking about today actually happened. This is all about Scienture Holdings Inc., which is the company filing this report. They're incorporated in Delaware and their stock can be found on the Nasdaq Stock Market LLC under the symbol SAG. The main event covered here is called an entry into a material definitive agreement. This is just fancy talk for signing a really important contract. So what kind of agreement is it? It's a securities purchase agreement. This is where the company agrees to sell its securities, which is usually stock, to certain buyers. On August 13, 2025, Scienture Holdings Inc., the company we're talking about, signed a securities purchase agreement. This agreement was with several institutional investors, which means they sold their stock to big investment firms, not just individual people. What did they sell? They sold a lot of stock, 325,000 shares to be exact. This is their common stock, which is like the regular ownership units of the company. And at what price each share was sold for? 120. That's an important number to remember, 20 say share. This whole stock sale process is called an offering and it officially finished on August 15, 2025. So how much money did they raise from this offering? Approximately $387 million. This is the money they got before paying any fees or expenses. How were they allowed to sell this stock so easily? They used something called a shelf registration statement on Form S3. This is like pre-approval from the government to sell stock over a period of time without having to file a brand new registration each time. On the same day, August 13, 2025, they also filed a prospectus supplement. This is a document that provides more details to investors about the specific stock being sold in this particular offering. Now, here's a detail about what the company promised to do or not do after selling the stock. For 15 days after the sale closed, they agreed not to issue any new stock or make any announcements about issuing more stock. This is a common practice to prevent flooding the market with new shares right after an offering and potentially driving down the price. And it's not just the company that has restrictions. Their officers and directors, the people running the company, also signed lockup agreements. What does the lockup agreement mean for them? It means they can't sell their own company stock for a certain period of time, usually to avoid them selling their shares right after the company sells its own, and potentially hurting the stock price. This period lasts for 90 days after the prospectus supplement was issued. If you want to see the actual contract itself, it's filed as an exhibit with this report as Exhibit 1-1. Besides the purchase agreement, there's another important document, a placement agency agreement. This agreement was made on August 13, 2025 with Maxim Group LLC. They acted as the sole placement agent. This means Maxim Group was the main go-between, helping the company find investors and managing the sale. What did the placement agent get for their work? They got paid a fee. This fee was 7.0% of the total money the company raised from the stock sale. So that's a pretty significant commission. On top of the commission, the company also agreed to pay back Maxim Group for some of their business expenses up to a maximum of $5,000. Just like the purchase agreement, you can find the full text of this placement agency agreement as Exhibit 102. Now let's talk about something that happened a little differently. This section is about unregistered sales of equity securities or stock. They're filing this because some stock was sold without being officially registered with the government in the same way the earlier offering was. This isn't entirely new information. They had already talked about something similar back on July 24, 2025. Between July 18 and August 11 of 2025, the company signed agreements with several individuals and one company, Blue Cap Ventures LLC. They bought shares of the company's stock. In total, they sold 11-10-6 series of common stock to these buyers and they raised about $176 million from these sales. The company has now stopped selling stock under this particular type of purchase agreement. These sales were done under specific exemptions from the standard government registration rules. They use Section 4A2 of the Securities Act, which generally allows private companies to raise capital without a public registration if they meet certain criteria. This next part is about Regulation FD, which stands for Fair Disclosure. It's all about making sure that important information is shared with everyone at the same time. On August 14, 2025, the company put out a press release. They announced the price of that stock offering we talked about earlier and shared some other related news. This information from the press release is being shared, but it's not officially being filed in the same way other parts of the report are. This means it's more for informational purposes and doesn't carry the same legal weight as the core filings normally would. And finally, this section lists the exhibits or the supporting documents for the report. Here you can see a list of all the extra documents that are part of this filing. For example, Exhibit 51 is a legal opinion from their lawyers about the shares. Exhibit 101 is that securities purchase agreement we discussed. And Exhibit 1, finally, Exhibit 1991, is that press release they issued. Now, to give you my take on all this, Scienture Holdings Inc. appears to be actively managing its finances by raising capital through stock offerings. The 120 per share price for over 32 million shares in the registered direct offering brought in a solid 320 per share price for over 32 million shares in the registered direct offering brought in a solid $37 million, which is a good amount of cash for a company at their scale. However, they also conducted separate private sales of stock between July and August, raising another $17.6 million from over 1 million shares sold at a similar price point. This mix of public and private fundraising shows they are strategically using different channels to get funds. The fact that they use a shelf registration statement means they likely anticipated needing to raise more capital and had a plan in place to do so efficiently. This is generally a sign of organized financial management. On the flip side, the company is paying significant fees to placement agents, about 7% of the gross proceeds, which is quite high. This commission structure effectively reduces the net proceeds they receive, and this is a cost of doing business to get that capital. The lock-up agreements for officers and directors are standard practice, but important to note. They show management's commitment to the company's stability post-offering. Looking at the unregistered sales, it's interesting that they are still pursuing private placements even while having a registered offering. This could indicate a strategy to onboard specific investors or to expedite fundraising from certain parties. The company is using these proceeds for working capital, capital expenditures, product development, and other general corporate purposes. This is a positive sign, as it suggests the money is intended for business growth and operations rather than just covering shortfalls. One question that might arise is the timing of these offerings and the overall market conditions for Scienture Holdings stock. While the filing doesn't go into detail about the company's current financial health beyond the fundraising amounts, we'd need to look at their other reports to see if this cash infusion is indeed transforming the business or simply plugging existing gaps. In terms of direction, Scienture Holdings is clearly focused on growth and securing the necessary funding for it. The company's strategy appears to involve efficient access to capital through registered offerings and private placements. A notable risk is the reliance on external financing if the company's operations don't generate enough cash to sustain itself, or if market conditions change. Making fundraising difficult, it could pose a significant challenge. Another risk could be if the company's growth plans don't pan out using the raised capital effectively. Overall, Scienture Holdings seems to be in a phase of active capital raising to fuel its business operations and development. The 1.20 per share price in these offerings is a key indicator of investor confidence at that price point, and the company's ability to tap into both public and private markets suggests a proactive approach to financing its future. Alright, that's our breakdown of Scienture Holdings Inc.'s latest filing. What's your take on these fundraising efforts and what they might mean for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.